Welcome back to Markets Today. If you're just joining us, it's Friday. It's all about Ask Mbithe. I want to hear, what do you want to know about stocks? What are you investing in this month of June? Are you concerned about COVID? I really want to hear your thoughts, and I want to take your questions as well. That's 20146, that's our SMS line, or you could reach out to us on our social media platforms. That's at Metropole TV Kenya or at Mbithe Mwema. In studio, we are joined by Dorka Angulu. We've had a very elaborate conversation on shares, and I like how Dorka was well prepared. I felt like I should have come with my books to answer the questions. Welcome back, Dorka.
Thank you, Mbithe.
What else would you like us to discuss?
Let's now delve into the budget.
Okay.
The budget is going to be read in the course of this month. So, what taxes and investments, what do you think could be?
Okay.
Yeah.
So when the budget is being read, the thing to look at the budget is the same way you operate your home. There's the money that you bring in if you're married, there's the money your husband brings in,
True.
and then there are the expenses that you have to go through every month. So what I want to assume you do is you say, this is the money that we have, this is how much we need to pay for. If there's if the money coming in is not enough, you're like, now do we go take a loan? Do we sell something? That's what you really do, because it has to balance, right?
Yes.
So that's the same thing the government does every year. So next week on Thursday, it will come and tell us its wish list. It wants to spend X on all this many things that it has to pay for. Then it will tell us to pay for these things. This is our source of revenue. Then it will tell us, because what has been happening is its wish list has been bigger, considerably bigger than its income sources. So it will tell us, to meet the gap, they will take out loans or they will either increase taxes. The first thing that they will do is just increase taxes for you and I in terms of what we consume. Some of the proposals out there are to increase what they call excise tax. Excise tax affects alcohol. They want to increase the cost of alcohol. They want to increase the cost of cigarettes. They want to increase the cost of anything that you're doing on your mobile phone. So if you're downloading apps, if you're streaming movies, if you're streaming music, they want to tax that. They call it the digital tax. And then they will start taxing things that you buy at the supermarkets. So the government is saying, we don't have enough money. What we are going to do is we're going to start taxing you every time you consume. If you take a soda, kutakuwa tax. If you do X, kutakuwa tax. The other thing that people are not sure of is, because the government needs a lot of money to just fund its operations, this year it has said it needs 2.5 trillion.
True.
For this coming year. And then, if you look at the year that's ending in June, I think the government will probably be able to raise about 1.3 trillion, 1.4 trillion on the higher side. Now, because of COVID, there has been a slowdown in the economy, so people are not generating taxes as they would have before. And also remember that the government reduced the taxes for pay-as-you-earn and corporate tax by 5%. So assume that maybe the government collects maybe 1.2 trillion in the next year. That's just a basic case. That means that this government is actually left with a 1.3 trillion hole that it needs to fill. So what it will do is it will go borrow locally from the domestic market. That's the treasury bills and the treasury bonds. And then it will also go to the global markets and also look for debt from the global banks, or even if they're able to issue a Eurobond to be able to fund. But because this might not be enough, and you know, when you're going to borrow even as an individual, you hope to borrow 100 million or 1 million shillings. At times the bank will look at you and say, no, we'll give you 600 for now because we are not very sure about your job and there are too many uncertainties around you. So it could be that they want to go borrow this full amount, but they're not able to. So the same way you would come back to your house and either decide to reduce your expenditure or look for other revenue sources, the government now will say, we're going to tax you slightly more because we need to cover this gap. It has to be met one way or the other. And the way they're proposing to start taxing you is through consumption and also through investments. So for example, for the stock market, they have increased the cost of trading by applying a VAT charge on it. Really? Value-added tax, yes. So now there's a value-added tax charge on trading. So before this tax charge, your broker would charge you anything between 2 to 2.5% if you wanted to buy shares. And the way you would look at it is, if I want to buy and if I want to sell a share, it will cost me maybe 4 to 5%. But now because of the value added tax charge, it goes slightly up to about 3% or more. So it becomes slightly more expensive for you to trade. And then they've also come and said, there's an asset class called the real estate investment trust, where a company can take a couple of buildings, put them in a structure and sell them to you as shares.
Wouldn't that be kind of a disadvantage to some of us who still want to, delve into,
investments? It is. But the government is saying, we have to make this work. You're a Kenyan. If you're going to consume, you'll have to do it. And I like that you're putting the context of, doesn't this create a disadvantage?
Yeah.
It does. And that's why when you're looking at investments, you look at shares as one asset class, because you're like, it will become slightly more expensive to trade. So you want to do a bit more work to understand what company will at least grow, because you want at least it to grow 12%, so that even though almost 6% goes to the cost, you've made something small.
Yeah.
Or you want it to grow a bit higher. So that keeps telling you now, how much is a minimum return that I want if I have to pay the broker, if I have to pay the government, so that I can still make a return. And then another place that it becomes now more interesting to invest in is to invest directly to the government and say, you want to take a loan? Here, I will give you a loan.
Now that one, you buy the T-bills?
Buy the T-bills,
yeah.
Or you buy the treasury bonds,
okay.
Or you buy the money market fund.
Okay.
So what has happened with the government, the infrastructure bond has been tax-free till now. So that was a good investment option, but it's long-term. But now there are also proposals to actually start taxing it.
Yeah.
Yes, so there are proposals to start taxing every investment space, because the government is saying we don't have money and we have to operate. So we are not shutting down Kenya. You figure yourself out. And when you look at it like that, I like the way your eyes are popping up. It tells you, for you to be prudent and to be able to make better financial decisions from here on, just try and look at your budget and consume less. And be very, very tactical and strategic about your investments. So before just going because the whole crowd is going, take a step back and say, how much will this thing cost me to get into? And how much return do I want? Because the essence of any investment is you don't want to lose money, number one. There's the risk that you could, but you want to be able to make sure that you've done a bit of your homework to reduce the risk, or to have enough knowledge to be able to know, if I go this way, then I might not lose money. And also the next thing you want to know is, if I go this way, it will cost me this much. So you want to spend some time. So one of the spaces that we are seeing, and why we keep saying hold on to cash for now, because there are a couple of moving parts.
True.
Hold on to the cash now, try and understand this budget, look out for it and try and understand, what is this budget saying? What is going to be taxed extra? So that then you can plan for your consumption, then you can see where opportunity is coming from before you make that final decision.
Right.
Yeah.
So now, as we're still talking about the taxes and the other investments, so what other investments apart from shares one can do?
Okay, so there are shares, then we've talked about the government bills,
the
treasury bills and the treasury bonds. And I think in this environment where there's a lot of uncertainty, you want to either hold cash in a money market fund.
Yes.
So you can look out for money market fund. These have been given between 8 to 10%, but it could come lower. And then you want to invest directly in the government if you have time on your side, right? Then what will happen because of this shock? If you have a bit more money, there will be opportunities in real estate. There are people who probably lost their jobs and they'll need to sell a home or something, which is unfortunate, but there will be opportunities in real estate where you can get houses at 10, 20, if you're lucky, even a 30% discount. So there will be such opportunities. And even for the stock market, there will be such, also good opportunities. I think give the stock market maybe 2 or so months just to see what happens with the company numbers, and then begin to actively look into it.
Okay.
All right. Dorka, that's all the time that we have today. Thank you so much for gracing us.
Thank you so much, Mbithe.
Really hope to have you again on our show.
My pleasure.
Okay. Thank you, ladies and gentlemen. It was Ask Mbithe on Friday, always a very exciting segment. Would you like to be part of us on this show? Reach out to us on Metropole TV or at Mbithe Mwema and tell us, what would you like to come and discuss with us? What questions would you like us to answer? Today, it's been just a recap of how do you trade shares, what is a share, what are the key things in terms of valuing a share, How do you look at the fundamentals? How do you look at the technicals? This is the action point that we have taken out of today. The government will be reading its budget next week on June 11th. I would encourage you to spend some time, if you have the time, to just follow the proceedings on the day through the parliamentary website. And if that's not something that you would like to do, I would also encourage you to watch us on Thursday. We will be having a debate trying to understand, what is the government saying? What do these decisions mean for me? This is important for you because it sets the environment in terms of how are you going to be able to either save or invest for the next 12 months. That's a critical decision that we want to be looking out for. And over and above that, we continue to say hold on to cash as we are trying to understand the uncertainty around COVID and how the world after COVID will look like. Then we can look out for opportunities. The opportunities we have identified include holding on to cash either through a money market fund or a bank account, or investing directly in the government of Kenya through the treasury bills or the treasury bonds, and to just wait a little bit before we can figure out what is happening on the stock exchange and what is happening in the real estate market. I don't know whether you agree with me. If not, I would like to hear what else you are seeing outside of the Kenyan borders and where else we can be able to grow our money. Thank you for your time. Enjoy your weekend. That's all from us here at Markets Today. Kwaheri.